What if I told you that the long-awaited financial revolution for the Iraqi dinar is not just a rumor anymore, not a speculative dream whispered in online forums, but a confirmed, bank-backed reality now set in motion by the very institution that controls its destiny? The Central Bank of Iraq has just played its most powerful hand, a final, decisive move that merges colossal financial strength with cutting-edge digital ambition. And if you are holding the Iraqi dinar or have ever considered its potential, you cannot afford to miss the seismic implications of this moment. The official confirmation is here. Iraq's foreign currency reserves have explosively breached the monumental $100 billion threshold, a staggering war chest of financial credibility that most developing nations can only dream of, and this is not happening in a vacuum. It is being launched in perfect, strategic tandem with the official confirmation of the Digital Dinar project, a dual-pronged masterstroke from the CBI designed to do one thing and one thing only: to forcibly propel the Iraqi dinar into a new era of strength, stability, and global recognition. And this is the detailed breakdown of how this historic convergence of physical reserve wealth and digital currency innovation will finally rewire the economic DNA of Iraq and redefine the value of your investment, pulling back the curtain on the precise mechanisms that will transition the dinar from a symbol of past instability to a beacon of future prosperity, a process that is no longer a matter of if but a concrete matter of when and how, starting right now. This $100 billion figure is not just a number on a balance sheet. It is the ultimate shield and the most potent weapon in the CBI's arsenal, a foundational bedrock of trust that signals to the entire world that Iraq is dead serious about supporting its currency with tangible, hard assets. Think of these reserves as a massive anchor. For decades, the dinar was like a boat tossed around in the stormy seas of geopolitical turmoil and internal instability, its value fluctuating wildly based on fear and speculation rather than economic reality. But this $100 billion anchor is now being dropped deep, designed to stop that violent drifting and hold the currency steady against the powerful currents of the global forex market. This level of reserves provides what economists call import cover, meaning Iraq now has enough foreign cash, primarily US dollars, euros, and gold, to pay for many, many months of imports even if its oil revenue were to temporarily shut off, which is a critical metric of national economic health that international institutions like the International Monetary Fund watch like hawks. And achieving this level fundamentally reduces the country's risk profile, making it a less speculative and more stable bet for foreign direct investment, which in turn creates a positive feedback loop of confidence that strengthens the currency's base value organically. Furthermore, these reserves give the CBI the unprecedented firepower to directly intervene in the currency market to defend the dinar's value. If speculators try to short sell the IQD or if temporary market pressures cause a dip, the central bank can now step in with billions of dollars to buy up dinars, artificially increasing demand and propping up the exchange rate until the panic subsides, a maneuver that was impossible when reserves were thin but is now a very real and credible threat to anyone betting against the dinar's rise. This massive financial cushion also allows Iraq to negotiate from a position of strength when dealing with international debt, trade agreements, and monetary policy alignments with its neighbors, moving it from a supplicant to a peer in the eyes of global financial powers, and this perceived parity is a crucial, intangible ingredient that precedes any meaningful revaluation. In essence, the $100 billion reserve is the loudest possible statement the CBI could make without saying a word. It is a demonstration of proven, accumulated strength that fundamentally alters the risk-reward calculus for every single person watching this video who has ever wondered if the dinar was a viable asset, transforming it from a high-risk, high-reward gamble into a strategic, asset-backed investment with a clear and defended trajectory towards a stronger, more stable valuation setting. The physical stage upon which the digital revolution can now confidently be built. But the physical reserve is only half of this historic equation. The other, more futuristic half is the officially confirmed rollout of the digital dinar, a project that is so much more than just creating a crypto version of the currency. It is the central nervous system for a completely modernized Iraqi economy, designed to inject unprecedented efficiency, transparency, and control into the monetary system, which are the very pillars required for a sustainable and strong exchange rate. The digital dinar, as a central bank digital currency, CBDC, will function as a direct digital liability of the Central Bank of Iraq, meaning every digital dinar in circulation is a direct claim on the CBI itself, bypassing the traditional commercial banking system for many transactions and thereby reducing counterparty risk and creating a purer, more direct link between the currency's value and the central bank's authority. This allows for revolutionary monetary policy tools. Imagine the CBI being able to distribute stimulus or aid directly to citizens' digital wallets in seconds, completely eliminating corruption and leakage in the system, ensuring that economic support actually reaches the people and stimulates the local economy, which boosts the GDP and inherently strengthens the currency's purchasing power from within the country. For the exchange rate specifically, the digital dinar's blockchain-based technology means that every single transaction can be tracked and traced in real time, making it nearly impossible to engage in the black market currency trading that has historically undermined the official dinar rate and created a destructive parallel economy. By forcing transparency, the CBI can collapse the black market premium and unify the exchange rate under a single, strong, official banner. Moreover, this digital infrastructure will seamlessly integrate Iraq into the new world of instant international settlements. Instead of relying on slow, costly, and opaque correspondent banking networks that have hindered trade, Iraqi businesses will be able to receive payments for exports in digital dinars or even directly in other digital currencies through instant atomic swaps, reducing friction, lowering costs, and making Iraqi goods and services more competitive on the global stage, which brings in more foreign currency and further bolsters those critical reserves. This digital leap is not an isolated experiment. It is a core part of Iraq's broader financial modernization plan, which includes upgrading the national payment switch and promoting digital wallets, all of which work in concert to formalize the economy, bring millions of unbanked citizens into the financial fold, and create a dense, robust, and efficient domestic market that is less reliant on the US dollar for internal transactions, a phenomenon known as de-dollarization, which is an absolute prerequisite for any nation that wishes to have full sovereign control over its monetary policy and a truly independent, strong currency. The digital dinar is the key that unlocks this entire future. It is the technological force multiplier that takes the raw, physical power of the $100 billion reserves and makes it agile, programmable, and instantly applicable to every corner of the economy, creating a synergistic effect where the reserves provide the stability for the digital currency to flourish, and the digital currency, in turn, creates the efficient economic engine that justifies and sustains that high reserve level, building a virtuous cycle of strength and growth. So, what does this all mean for you, the dinar holder, the astute investor who saw potential in Iraq's future when others only saw its past? It means the foundational landscape has irrevocably shifted. The two most critical pillars for a significant currency revaluation, massive asset backing and a modern, transparent financial infrastructure, are now being actively constructed by the Central Bank of Iraq itself, moving the entire project from the realm of theory into the realm of executable policy. The path forward is now clearer than it has ever been in the last 2 decades. The CBI will use its immense reserves to maintain a hard floor under the dinar's value, preventing any catastrophic collapse and slowly, methodically guiding the official rate upward as the digital dinar system comes online and begins to strangle the black market, unify the exchange rates, and formalize the economy. This is not a process that will happen overnight. It is a carefully managed, strategic rollout designed to avoid shocking the system and to ensure long-term stability over short-term speculative gains, but the direction is unequivocally, undeniably positive and points towards a stronger, globally recognized Iraqi dinar. Your patience and foresight are now being met with concrete, confirmable action from the highest financial authority in Iraq. The waiting game has evolved into a watchful strategy game, where understanding the sequencing of these events, the reserve growth, the digital dinar pilot, the collapse of the black market premium, and the final, formal adjustment of the official exchange rate, is key to managing your expectations and recognizing the milestones as they are achieved. The confirmation of the $100 billion reserve and the digital dinar is the starting pistol for this final, decisive phase. The second critical phase of this transformation revolves around the intricate and deliberate strategy the Central Bank of Iraq is employing to manage the transition without triggering hyperinflation or economic chaos, a delicate balancing act that requires immense skill and the very financial buffer they have now built. A sudden, massive overnight revaluation, often fantasized about in speculative circles, would be an economic disaster for Iraq. It would make the country's non-oil exports prohibitively expensive, crush nascent local industries, and likely cause a crippling spike in inflation as the cost of imported goods plummets and demand surges uncontrollably. The CBI is far too savvy for such a reckless move. Their plan, as evidenced by these two parallel initiatives, is one of managed appreciation and structural strengthening, not a speculative big bang. The $100 billion in reserves provides them with the tool to manage this process with a surgeon's precision rather than a sledgehammer's force. They can now target a specific, gradual strengthening of the dinar against the US dollar, perhaps by a few percentage points per quarter, using their reserves to smooth out any volatility and ensure the new, higher rate holds firm, giving the domestic economy time to adjust, encouraging local production to meet rising domestic demand, and attracting the kind of long-term, productive foreign investment in infrastructure and industry that builds a real economy, not a speculative bubble. This gradualist approach is exactly what successful economic transformations, like those seen in post-war nations or countries emerging from hyperinflation, have historically employed. It is boring, it is methodical, but it is sustainable, and it leads to a permanent strengthening of the currency that is rooted in genuine economic growth rather than fleeting market hype. The digital dinar is the perfect tool to facilitate this controlled transition. Its programmable nature means the CBI could, in theory, implement features that discourage rapid speculative hot money flows, a major danger for any appreciating currency, by imposing holding periods or tiered exchange rates for large, short-term transactions, thereby protecting the domestic economy from external shocks while still allowing the fundamental value to rise. This entire strategy is focused on one overarching goal: to increase the purchasing power of the average Iraqi citizen in a stable and permanent way, which is the true definition of a strong currency. A stronger dinar means that the salaries Iraqis earn will buy more food, more medicine, more electronics, and a higher quality of life, both from cheaper imports and a burgeoning domestic market, creating a powerful sense of national pride and economic optimism that fuels a virtuous cycle of consumption and investment. For the global investor and dinar holder, this means that the value of your investment will grow in lockstep with the genuine, measurable health of the Iraqi economy, its GDP, and the prosperity of its people, creating a solid, asset-backed store of value rather than a lottery ticket. The CBI is not just trying to change a number on a forex screen. They are attempting to re-engineer the entire economic reality of a nation, and they are doing it with a level of financial and technological preparation that is, for the first time, truly credible and formidable. The patience you have exercised until now must now evolve into a strategic understanding of this phased process, recognizing that each announcement from the CBI, each milestone in the digital dinar rollout, and each quarterly report on the reserve levels are not isolated news items but interconnected pieces of a grand, deliberate, and finally achievable strategy to cement the Iraqi dinar's place as a respected Middle Eastern currency. The pieces are all on the board and the game is now in play. To stay ahead of the curve and fully understand each move as it happens, your most powerful tool is information. You need to follow this story with a discerning eye, focusing on official sources and expert analysis that cuts through the noise of speculation. This channel is dedicated to providing you with exactly that: clear, data-driven updates on the CBI's policies, the digital dinar's progress, and the hard economic indicators that signal the next phase of this journey. We are here to translate these complex developments into a strategic understanding you can use. Finally, we must look beyond the immediate mechanics of reserves and digital currency to the broader geopolitical and economic horizon of 2025 and the profound long-term potential this holds for Iraq's role in the global economy and, consequently, for the stratospheric trajectory of the dinar's value. Iraq is not operating in a vacuum. It is a key player in a region that is actively seeking financial independence and a reduced reliance on the US dollar, and the successful implementation of a strong, digital dinar could position Iraq as a surprising leader in this new Middle Eastern economic order. Imagine a near future where Iraq, buoyed by its massive reserves and a fully operational digital dinar, begins to invoice its colossal oil exports in dinars instead of US dollars, or at the very least, demands payment in a basket of currencies that includes a significant portion of its own. This single act would create an immediate and monumental global demand for the Iraqi dinar, as every nation that needs Iraqi oil would be forced to acquire dinars on the open market, driving its value up through pure, fundamental necessity. This is not a far-fetched idea. We have seen other commodity-rich nations like Russia and China make similar moves to de-dollarize their trade, and Iraq, with the financial muscle to back it up, is now entering a position where it can realistically consider such a sovereign monetary policy. Furthermore, the success of the digital dinar could see it become the backbone for a regional digital payment system, facilitating trade and remittances between Iraq, Jordan, Iran, Turkey, and the Gulf states with a speed and low cost that the current dollar-dominated system cannot match, further embedding the dinar into the regional economic fabric and increasing its intrinsic utility and value. This long-term vision extends beyond oil and regional trade. A stable and strong Iraq, with a modern financial system, becomes a magnet for reconstruction and development projects, requiring billions in investment that would flow into the country not as volatile foreign currency but as productive assets that generate returns in dinars, creating a powerful, self-reinforcing economic engine. The RV potential that is so often discussed is, in this long-term context, not a single event but a multi-year process of appreciation that could see the dinar regain a significant portion of its historical strength, making it one of the most remarkable financial turnaround stories of the 21st century. For you, this long-term perspective is everything. It transforms the wait from a period of uncertainty into a period of observable, measurable progress where each step, the signing of a major trade deal in dinars, the integration of the digital dinar with a neighboring country's payment system, a steady climb in non-oil GDP, is a concrete marker on the road to that stronger valuation. The central bank of Iraq's final move, this combination of the $100 billion reserve and the digital dinar, is not the end of the story. It is the powerful, confident beginning of the final chapter, the chapter where Iraq reclaims its economic sovereignty and the dinar reclaims the respect it once held. The world is watching, and for those who have positioned themselves ahead of this curve, the rewards will be proportional to the patience and foresight they have demonstrated throughout this long and complex journey. The stage is not just set. The curtain is rising, and the main act of Iraq's economic revival is now beginning. The journey to a stronger Iraqi dinar is now being written in real time by the Central Bank of Iraq itself. This is not speculation, it is confirmed policy. To ensure you don't miss a single update, a single confirmation, or a single strategic insight into this unfolding story, your immediate action is crucial. Subscribe to this channel and hit the notification bell so you are alerted the moment we release new content. We are your direct source for organic, original data-based analysis on the CBI's moves, the digital dinar rollout, and the precise factors that will influence the dinar's rate. This is the most critical period in the modern history of the Iraqi dinar. Don't watch from the sidelines. Subscribe now, join our community of informed investors, and let's navigate this final, decisive path to a stronger dinar together.